And thanks so much for your time today. First up, what's your reading on everything that's happened at the BRICS summit, and more importantly, Navarro's comments coming in on that, saying that the BRICS alliance is not here to stay? What is your take on that?
Well, even in an administration where people are pretty uninhibited about their commentary, Navarro stands out for his lack of inhibitions. There is some substance there that the BRICS are a very diverse set of countries, both geographically, politically, economically. If you talk about a common BRIC currency, I think that's somewhere very far in the distance. There's nothing much that's going to be immediate. When you look at markets, the question is how much of the, say, development of intra-BRICS trade is organic, how much of it is pushed by government policy. On the other hand, they all are united because they see U.S. policy as, or the shift in U.S. policy as being a threat, and that's pushing them together, and you never know what might come out.
Yeah, absolutely. And Steve, I think, the question really is what happens to money flow and what the yields across the globe are indicating as central banks go more and more into the easing mode, and hopefully Fed as well is in the offing next. How do you think money flows and financial assets are likely to move across the globe?
I think that's the big question. And you can look at the U.S. as being a big global hedge fund. It runs a current account deficit, a significant one. It's likely to continue. It borrows cheaply, and it invests it in risky assets, technology, new innovations, and so on. And you can see sort of the returns to those investments are used to pay off the borrowing. So now people are looking at things like stablecoins, they're looking at AI, they're looking at other technology. And if that works out, there's no reason that model should fall apart. And that model has helped support the dollar because of the capital inflows into the U.S. If that turns out to be premature, or if it doesn't happen, say this blows away and it turns out to be ephemeral, the dollar could be in trouble because the big ratios, net international debt, net government debt, those are all at high levels and continuing to rise. So I think a lot depends on the technology sort of fueling growth in the U.S., and uniquely so that capital from the rest of the world says if we want to buy into this, we have to buy into the U.S. And that would be a very dollar positive story, U.S. positive story. But if it doesn't happen, there's kind of severe risks on the downside.
Steve, another big trigger for the U.S. market this week is going to be the CPI reading that's expected later this week. Now, you also have the Fed meeting next week, and on one side, on the equity front, you have NASDAQ at a fresh high. Is there anything on the CPI front or the Fed meet outcome that you're penciling in that could change the direction in which the U.S. markets are trading?
Well, I'd say on the CPI, what you really want to look out for is, and what's the big risk to, the sort of market enthusiasm and the low bond yields that we're seeing, is if it clearly comes through that inflation is not just a question of tariffs that everybody expects, but say in core services, we begin to see signs that inflation is firming. I think that would be something that would affect, Fed behavior. Now, we think that the labor market is weak enough that the Fed will cut by 50 basis points. You have about 27 or 28, so that would still be a pretty big surprise. The last 4 months of non-farm payrolls have averaged about 27,000, which is well below anybody's or everybody's estimate of long-term potential. And we think, in retrospect, the Fed is going to say, look, had we known the numbers were going to be so soft, we probably would have cut sooner. But, because of revisions and so on, the weakness is only coming to, really becoming clear right now. So we're going to do a catch-up cut, maybe, 25 that based on current conditions and 25 based on what we would have done had we known at that time in real time just how weak things were. So we think there could be a surprise on and a dovish surprise next week.
Okay, Steve, great to have you on the show. Thanks as always for those insights. Let's just mark what the Nifty implied open is currently at, and after that steep fall that we had in last